What's up, guys? It's Ron from Ronald Rohde Law, and we're back with a really exciting interview. This is my friend Justin Smith. He is a senior vice president. He is primarily a tenant rep broker in Irvine, California. So, Justin, just welcome to the channel, and we're glad to have you here.
Thanks for having me, Ron. I'm looking forward to our conversation today.
Yeah, and I think we talked a little bit in the preview, just about your ideal client, who you work with. It's a little bit of a function, obviously, of where you are and just the price per foot. It's difficult for people even to get into iOS to buy 2 acres of low coverage yard space. I mean, we're talking a few $1 million or 10 million bucks. I don't know.
The numbers get large quickly.
For
Yeah,
sure. Yeah.
it's hard to start here and fathom your first small investment be $5 million.
That's right. That's right. But the purpose of our call, and I think what would be really interesting is if you want to talk more about your experience, on the brokerage side, you're really into leasing and some of the fundamental concepts that if you're an investor and you're looking to get started, I think you got to incorporate the fundamentals into whatever your commercial real estate investment is at any level.
Yeah.
And so I guess just walk us through a little bit of your background. Like, were you always interested in commercial real estate? You've been doing it a long time, but
Yeah, I started thanks to one of my four sisters being in commercial real estate and being a 1031 exchange accommodator. And so she knew all the brokers because brokers help handle a lot of exchanges for people. And that helped start and craft my world of who I know and then firms I could potentially start working with. And so for me, it all began in industrial by virtue of me meeting with a bunch of industrial brokers. And coming right out of undergrad, I'm not sure I thought to be too picky in the sense of keeping other career paths open outside of real estate. Once I found a good fit, team wise and firm wise, I just jumped all in into the deep end and never looked back. And so a lot of my work started with like walking multi-tenant parks, knocking on doors, seeing who's there, asking them what's going on with their business. And so it's great to have it be full circle, to have that be where I started and what I started doing as a broker. And then even though the deal sizes and types have grown, and even though I've started to now be able to invest in property and be a landlord, like to have that be part of like the full circle of the experience is great. And then that has helped lead to being able to use the experience from being a broker as a landlord and then value, some of those experiences and help that be like help me become a better landlord or help me do better leases or help me lessen vacancy.
absolutely. Yeah, I think understanding your tenant is so important at every level. Whether your tenant is
Yeah.
Amazon or FedEx or Nike, understanding what their goals are and how you can structure a lease and the timing of payments and everything to give them what they want and also give the landlord what they want is kind of a creative win-win. I do believe there can be a lot of win-wins because especially on the legal or commission side or on the brokerage side, people are not just about the money. There are certain lease clauses that tenants will really value, and the landlord says, well, I don't even value that, I'll give you that if you give me more base rent, and the tenants will
Yeah.
say, yes, I want that clause. And so I would say it's a win-win. Landlord gets more money and the tenant gets some legal protection that they want.
Empathy. Yeah. You have to be able to feel what they're feeling and understand what they are doing as a business owner and then figure out how you can align each other's interests. No doubt.
Yeah, so I guess tell me a little bit more about your investments. Are they multi-tenant? Are they in Southern California?
Yeah. I started investing in other people's deals. Like that's a great way to learn and see without the doing part. When you think of like raising money, like a friends and family money, and syndicating and learning all of the syndication laws and rules. And then it grew into me also owning small residential properties and small multifamily. But what's relevant for today is eventually I did an exchange into multi-tenant industrial in Dallas, and then another one that's in East Texas in Longview.
Oh,
And
I didn't even know
so
you own something in Dallas.
I
What
do, yeah,
what are some of the details if you mind sharing? I'm gonna go drive by your building.
totally. Yeah, don't throw eggs at it or toilet paper
No,
at,
I'll pick up
but
some trash. I'll pick up some trash
yeah,
for you.
it's 35,000 feet, 14 tenants. All the bays are 2,500 feet.
Okay,
Half of them are ground level loaded, half of them are dock high loaded. And
interesting.
then it was Berkeley Partners who was looking to sell it at the time I was looking to buy. And this was a year after trying to syndicate a deal in Euless, so West Side. And then I decided I need to put my own money into this so that I can buy my first one without the pressures of other people's money and being responsible for it. And so I had met Berkeley Partners on the trial run the summer before. And so it was great to come across them when they were hot to be in dispositions mode to continue to grow their
Yeah, I was
portfolio.
gonna say I've done many deals with them, but they're not easy sellers. I mean, they know what they're doing. So
They do. And so it turned into a great relationship where they have sent me some deals like afterwards to look at that weren't on the market yet. And I love how sometimes these relationships that you create in the deal moment of buying and selling oftentimes can blossom and turn into other opportunities, and you can continue to build even though the deal's done.
for sure, for sure. I think that my advice to every CRE professional out there is you've got to leverage your network, leverage your contacts. And if you're operating at a high level in CRE institutional world, you may trade down a little bit, but to me, that's the best way to make money is investing in what you know. And
Yeah.
there's going to be opportunities that are a little bit too small or different location, just not a perfect fit, but they are still phenomenal returns, and you can confidently underwrite it and say, yeah, this is a great deal, and my client can't buy it. It's too small or whatever, but putting together. So that's definitely what I see. Some of the most successful, but also most fulfilled, brokers and lenders. And I don't see a lot of attorneys. I'll speak for my entire.
They're out there. Don't worry. Yeah.
Um, but yeah, well, maybe Cantex. I don't know if you know Cantex and Romy. He's a big lawyer, that
Okay.
former lawyer.
Heard of them. Yeah.
Yeah, yeah. So he's a good friend of mine. But yeah, so I guess tell me a little bit about the deal stages. You did this one. Did you have value add? Did you have vacancies coming up? Was it a mark to market or?
Yeah, I wouldn't say it was before all of that, but it now being 7 years ago on that one particular first like acquisition, I feel like the market wasn't in that phase or part of the cycle where there was so much rent growth that everybody had a rent roll that was missing out on these future rent increases. So at the time, it really was what you would think of like a equilibrium market where you do leasing and you do renewals, you fill vacancies, and you can always add value like physically or like operationally. But there was no like huge problem. There was two vacancies. And so, an interesting part is thinking through vacancies with a lender and how a lender might view vacancies in a multifamily versus in industrial or another asset class. Where having two vacancies, I looked at it as that's one of the value add components, right? So if
Mhm.
you're buying on existing NOI and you're trying to cap this NOI to come up with a value and see if it's reasonable, like those are opportunities if you feel like you can lease them in a reasonable amount of time, or if you know why they haven't leased or can figure out what is missing that the market needs. And so that particular one was like an 8.8 cap going in with two vacancies back in the day, I would say. So it was interesting of like now you're like, oh my gosh, you got like a 10 cap? Like that's insane. You don't see 10 caps in these. And like it's a home run, you're a genius. And it's more like that's just what kind of prevailing returns were at that moment. And then with that particular property, every property has its own orientation. So if you just
Hmm.
think of like, where is the loading? Where's the drainage? And then how's the roof situated? Not only when was it replaced last, but like how does water flow off of the roof? Where does it go? And what condition is it in? And so this particular one has an interesting drainage that took me a little while to understand. What is it doing now? Where are there issues? What can we do to fix it? And how would it affect tenants? And so that was one of the challenges for that particular property, was to figure out like, okay, let's make sure it's draining properly and let's make some modest improvements to improve upon that so that everybody has a good experience at the project. And then that helped lease up the units and away we go.
Interesting. So were tenants just seeing the signs of water staining and not leasing it, or because I mean I can't imagine they'd be walking by after a rainstorm. Was it just they?
Well, there's a saying in Texas about the weather, isn't there? If you don't like it, wait 15 minutes and you'll get something new.
Very
So,
true.
yeah, I wouldn't say it was like a deluge where like, oh my gosh, this property is like always flooded. But they're just issues. Like every property has some where people will come by and have an impression. Or you have, like, let's say some of the water is causing a leak in the building. That's a problem, right? You can't lease a property that has water coming into that property. And so, joints, backer rods, drainage going underneath buildings or in between units, and drainage. Oh
Because
gosh, I
this was a
can't
flat
remember.
roof. Just backing up, the flat roof.
Yeah,
Okay.
and then the drainage backed up to the neighbor's property, so you get to deal with the neighbors. So how are the neighbors doing with the vegetation, trees, tree trimming? Does water run from their property onto yours? And that's one that I have dealt with on other properties now too since. And so those are things that I, as a leasing broker and doing deals like as a broker, am somewhat like a mindful of, where now I'm like very mindful of like, let's show up with a hose and let's see where every drop goes, just because it happens quarter after quarter, year after year. Like water is persistent. Water issues don't just magically go away. And so I have yet to deal with snow, thankfully, but at least with rain and water, like that was something where I was initiated into the club of now being mindful of it. And I think that's helped me look at future investments with an additional lens that I can think about. Okay, what's that mean here? And what's that mean to our ability to lease or get returns or spend money on CapEx?
No, I think that's great. I think you can really you can learn so much from doing it in a job, but the lesson learned when it's your own investment is completely different. I don't know if it
Yeah.
just sticks with you more, but I think more about cost effective solutions, and I don't know, urgency is a little bit different too. It's like if I just had a client, hey, I'm following up, hey, I'm trying to do this. I don't know what you want to do. We'll just terminate the deal. We don't really think about that we have to fix this. We can just walk.
The buck
Versus,
stops with you.
yeah, when you're the owner, it's your money and it's your tenants and it's your reputation. I think
Yeah.
um, one thing that I work with a lot of clients is trying to create almost just silly branding, but trying to be consistent in how you deal with all your tenants across properties. And
Okay.
it's crazy, but even with multi-tenant, you can start to establish a little bit of a reputation that, oh, this one's managed by JRS, real estate. Oh, they're good. They're a good building, and that word can spread around to other tenants. Because how often you find at that deals at that size that it's like a lot of referrals, or hey, somebody knows somebody and they call you and they say, I know somebody who's leasing space, do you have a vacancy?
In that first project, we've had that from one of the tenants, and it happens to be the same tenant that has leased multiple units. And so that's a fantastic way to fill vacancy, right? And to stay occupied. Although that comes then with its own set of considerations. Do you want one tenant to all vacate someday, unknown day in the future, and have multiple units vacant? Do you stagger some of those lease expirations and have that be a mechanism that like gives you some more runway or some more predictability, or allows them to maybe scale back down as they're moving to a larger building or buying their own?
Or
And
they gang
so,
up together. I've had that too, where if you
okay,
put in too many of the buddies, like, oh, my uncle wants a space and so, then they feel emboldened to team up against a landlord and say, nope, all of us are going to vacate. And I say, see you all, bye bye. But
yeah,
it's not a pleasant feeling, and you kind of have to be negotiating from a position of power, cash flow coverage, and confidence in the market and everything. And if it's a down market, you may get really squeezed if you can't afford that big of a vacancy loss.
yeah, I could see that where there's no secrets when you just have to walk out the door, hang a left, hang out with whoever you would have been talking with casually anyways, and then you're shooting the breeze about, hey, I've got this issue with the landlord, and what am I going to do? I know I've got something, and let's see if we can leverage our powers together. I could totally see it.
Yeah, I think that's a fair assumption. Assume all of your tenants are friendly to each other, and assume all of them talk and collude. So if you give the rental increase, you can say the first two people that accept it, you get the low rate. Everybody else, and then you can pit them against each other and get them to break ranks.
Yeah. It's interesting how to be fair and reasonable, and also how to like make sure you're not taken advantage of, and to use what leverage, momentum, or power you have when you need to protect yourself, without a doubt. That's a
Yeah.
balancing act.
So do you talk about that in your book? I'll give a nice segue. In your most recent book, this is what, your second or third?
Just published my second, and
Second
then
book.
just started my third. And so third is all about buying these types of properties.
Yeah, and I did buy it. I had a chance to skim. I haven't quite fully read it, but obviously it's a lot about leasing,
Yep.
understanding that discounted cash flow and the reliability of income. Do you talk about legal strategies, or like how to potentially recover from a corporate guarantor or that sort of thing?
Yeah, it's funny. I am not an attorney, right? So you would see that on the top of chapter 7 that talks about clauses for a lease contract. And then how can you not discuss specific language, because everything is memorialized into one document, and that's the document that governs the whole relationship for what could be 2, 5, or 10 years. And so that's an integral part to reference. And so I go through clause by clause, probably the top 25 or 30 clauses of just um, landlord perspective, tenant perspective, lender or broker perspective, and just how it usually plays out. And I found that format gives you the empathy where you can understand both parties. And then one thing I did in this second book, Industrial Income, that I did not do in the first one quite as much, was I interviewed a lot of top leasing managers for industrial like institutions and
Hmm.
leasing firms, and then went over what I see and thought, and then asked them and had them go over how they deal with certain issues. So it was really fun to play devil's advocate and to get everyone else's perspective. And so that added a whole bunch of additional color and learning for me and for the reader. And so it was a lot of fun to go through and then cherry pick the gems from all of those interviews that I thought would be most helpful for the reader.
And so did they tell you, like, what is their top three issues, or where they have the most, flip back to the lease?
Yeah,
Did
oh
they talk
yeah.
about that?
So
Yeah.
yeah, think about like, do you give options to extend? When do you? Why wouldn't you? Or
It's
think
all a
of like,
benefit to the tenant.
yeah, environmental. Oh man, how do you deal with environmental and leases? You know how you may as you're buying a property. And so how do you deal with it with tenants? And do you do any investigation beforehand or afterwards? Or how do you
Yep.
share any like a liability or mutual indemnification? What hard do you try and skirt those types of issues? And yeah, so I just went down all of the top kind of critical deal points, and then would just kind of ask how each person would handle like a specific situation or like common situations that I see, like how they handle those. And so that was a way to kind of broaden the topic and get more experience and more insights.
So were you saying those as examples of the top issues? Are more institutional or higher credit tenants really concerned about mutual indemnification and that sort of thing versus I would kind of say in my world in the the 2 to 10 size cam, like cam is always just the biggest dispute all the time. What's recoverable, what's not recoverable, what's a capital expenditure, what's an expense, all of that stuff. Sometimes like affiliated party stuff, audit rights, non-contingency based stuff, we get a lot of grief, not just during lease construction, but operations. That's where we're going back. We're flipping back to CAM and saying, is that listed? Is this expense code under this category? Or is it a catch-all, some but not all? And the tenants really they want to narrow it. They want to say you can affirmatively only charge for blah, 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 blah. And the landlord wants, well, we will not charge for these, and everything else
Yeah.
becomes open. So is that the same at higher level or different?
I would say a little bit of both. And so in this third one, I'll cover it more from your perspective, because those are the tenants and the leases that you're structuring for multi-tenant parks. But for a lot of landlord leasing for 20 or 200,000 or larger, those are triple net leases, right? 95% of them are triple net leases. And so that does not mean that you don't still parse whose responsibility is it for maintenance and repair and replacement of any part of the building system. Like there is still an allocation of here's the 40 parts of the building, which side are on your ledger, which side are on my ledger. And there's a opportunity to shift from one to the other side. And so, yeah, just the mechanics are a little different in a net lease. Like, is it an absolute net lease
Sure.
where all expenses, no matter what, as if you owned the building, are put onto the tenant? And so I go into that a bit in the sense that that is an integral part in finalizing a lease contract with the tenant and with the landlord. Like you have to cross that bridge. And so how do you cross it? What's the best way? And so first book's on tenants and what's the best way for them. And second book is on landlords and what's best for them.
Yeah, that's what I was going to ask you. You said 95% is just a regular traditional triple net lease. What's the other 5%? Will you consider absolute?
Uh, Absolute, or just like sometimes you'll see a gross lease out there. Like,
Oh, okay.
yeah, you'll see what I used to say was like grandma, grandpa, but there's an odd institution here or there that'll still do a gross lease if they have low basis,
Okay.
um,
Okay.
or if they, yeah, own the property for a long time, or if it's for a shorter term. Like, let's say we're in the
Right.
bottom of the real estate cycle and we're trying to keep buildings full and we're competing against a bunch of subleases. Like, could there be an instance where you do that in a soft market? And again, it's still only 5% of the time, so it's not like all over the place, but it does happen, and
Yeah,
so it's a good
that's
thing
a
to be
great
mindful of.
that's a great comment. Is that if you are in a down market, shifting some risk to the landlord can be a very attractive way to attract new tenants or somebody to sign a lease and saying, we'll do a gross lease. We'll take the risk of property taxes. We'll take the risk of insurance. And in some way, too, the landlord is better or closer to be able to contest it or to minimize those costs. So we talk about economic incentives, and sometimes the landlord is in the best position to minimize costs, the cheapest way to minimize cost. And so they can put their money where their mouth is, so to speak, with a gross offering.
So, like a multi-tenants in Dallas, Fort Worth, are they triple net or are they gross? And I would say 10 years ago, probably most were gross. And maybe now a lot more are triple net. And maybe, I don't know, would you say it's 60-40 or 70-30? Like there are more increasingly turning that way, but
Yeah,
tenants want gross. And the further you get out from the core, the more you're going to deal with gross. And it's interesting to also think through like CAM reconciliations and can you have pass throughs in year 2, 3, 4, and 5 of a lease as a landlord and still offer a gross lease but still recover some of the expenses. That's been a strategy that I've found is like it can help for these smaller multi-tenant properties that can still like offer them some protection and offer you some like ability to recoup increased expenses over time.
Yeah, for sure. And I think to answer your question, the trend is definitely moving towards everybody wants to be more triple net, but I don't know that it's the best because they're signing like a 3 year triple net, and it's effectively going to be kind of hard to catch up or to have reconciliation, if there is a big overage, because these people just move out and they're not, you can't collect
See
against
ya.
them.
Yeah.
So I think it's almost just triple net for the sake of cap rate exit. But then if cap rates are climbing up anyway, the operators will say, why don't we just go to gross? We can efficiently manage it and we'll get more tenants at a higher revenue number, and we'll just minimize our expenses because we're selling at a 9 cap or an 8 cap anyway. It doesn't matter. I'd rather just jack up NOI. So
Yeah. It all comes back to NOI any way you slice it, no doubt. You just have to have a strategy and then just think through how does this factor into my holding period for the property.
and that's something that I talk to people a lot. People reach out and they kind of want advice, and they say, what asset class should I go into, what sub markets? And I say, I don't care. I mean, you can pick multifamily, you can pick retail, you can pick industrial, you can pick infill, you can pick tertiary, whatever. the
Yeah.
the most successful and the happiest investors that I've seen, they just pick something and double down and triple down and over and over until they have market power, until they have all the market knowledge. When they know 6 different AC companies that can all come out, if they need a replacement unit, they know all the foundation, they know 6 plumbers in the area to service their 30 buildings.
Yeah.
That's to me the message. And it's asset class agnostic. You just pick, who do you like talking to, which one fits your goals as an investor. But
Yeah.
I don't know. People really struggle with that choice as if it's very important. What field, like maybe how you started. You're like, well, I've got great people, I've got a great team. I kind of like commercial real estate, but I'm gonna bet on the people and the training, and I could pivot. I could bring it to something else. That's kind of with real estate. I feel like the asset class doesn't matter as much beyond what you like doing. Um, if you hate residential buildings, and you probably don't want to own multifamily, but if you're indifferent between retail or small bay industrial, it's the same type of stuff.
You're going to need to be a student of a game. What game do you want to learn and invest into? Without a doubt. Yeah. There are people who are
Absolutely.
successful across all of them.
So what's in the future for you? I mean, you obviously are expanding your own portfolio. Are you still buying in 2024? Are you waiting for these rate cuts, these phantom rate cuts?
Yeah. Peter Linneman said 5 times this year. Yeah. Now we're hoping for one. Um, it's all good. I kind of look at it as I try and make an investment every year, no matter what. And some years I make multiple investments. Some years I have made none. I generally try to always make one. But the way I look at it is what type of investment is the best that I can make in that given year with whatever the market will provide. But I also look at it as direct ownership, investing in another investor's deal, and then last resort, buying some stock of one of the big publics that's an industrial landlord. But what I have found is over time, the book of people that I know, or like the relationships that I have with people that are syndicating deals and are always raising money for their deals, like it continues to increase locally and across the country. And so if I have the capital available from my brokerage income, or if I've sold a property and have a 1031 exchange, let's go buy something directly and manage it and profit from being the sole owner. If I'm in between, I'll often go invest in someone else's deal where you can invest in 10, 25, 50, 100,000, $250,000 increments. And then you're a limited partner and you have to be comfortable being a limited partner in someone's deal. And so I love having the ability to do both when the situation dictates that's the best move to make. And so that's how I have crafted my own personal investment strategy into this asset class. And what I found is a lot of those investments as limited partners, those GPs, the general partners, are trying to add value, get their return, and return the capital and return of and on capital to their investors. So that will provide more seed capital in years 2, 3, 4, and 5 from whenever I made that investment. And so now I am starting to have investments come back to me. And then that helps fuel, okay, I've saved up enough with my brokerage income to go buy something direct. And so I've just found those are two ways to continue to put capital into the market and into deals and to grow relationships and experience and people who have property managers and who have contractors and who are dealing with lenders and hard money and conventional loans and are dealing with insurance companies and insurance increases and the leasing market. And so that's how I've kind of gone back and forth on those a little bit and just kind of maintain like building both of those positions. And then just every year think, where are we at? Where's my deal flow? What am I seeing? What do I have to play with? And how do I want to move my pieces or not for that given year? So that's been how
No,
it has kind of
that's a great
organically worked
argument.
out.
I think, yeah, I think I'm in almost solely that first bucket. I love the control. I
Yeah.
I see the stories of fraud, and unfortunately, it's happening on the Reg D stuff. It's happening on otherwise looks okay. And to me, I would just be gutted to have fraud, and lose everything, right? You're losing all your principal. Let's be real. Sometimes they're not even buying the building, like the Eli Schwartz guy who ran off with the money, didn't close, and now he defaulted on his quote settlement repayment terms. He made the first payment, which was like $3.5 million, mostly to pay the lawyers, and then he defaulted on the second. He had a 30-day grace and he defaulted.
Yeah.
Um, so with the direct, I feel like if I can, there's so much risk in real estate already. If I can take the fraud one all the way down to zero, it's like, well, I control. I'm not going to steal from myself. But the LP, there's some little portion that's not zero that, hey, this thing could go bust, and not maybe intentional, but maybe you had some CFO or some controller embezzles all the money. The principals maybe didn't have an idea, and you'd be like, well, shoot, you should have known, but it doesn't change the fact that somebody's in jail and they spent the money.
Oh yeah.
So, but
Yeah, the variables change and the risk factors change. And there's plenty of people that won't do either. I just happen to do both. Yeah.
well, I like it because you mentioned about watching somebody else, and if you're brand new, I love it to watch somebody just to get a lay of the land, get an idea of timing and just general process and comfort level. But then, as maybe a more experienced investor, continuing to invest, if you get good communication, you can see how are they dealing with insurance. At what point are they, filing lawsuits for property tax? And you can say, oh, this is super interesting. You may not see that on the brokerage side. You don't really know what is the tipping point of a property tax increase that is worth it to go through the hassle of filing suit. Just in Texas, it's very common, right?
Yeah.
But all the other things about maintenance and paint upgrades and tenant concessions, and are we seeing a softer market? It could all be extra really good data for a direct investor to get exposure to ongoing operations.
They
But
have to build a business plan that they can articulate and sell and defend, right? Which you should be doing with your own properties,
yep,
right? And then they probably do a more thorough job of reporting, right? Of like,
one can hope. One can
it,
hope.
yeah. And so there are things that just the nature of like a general partner and limited partner and a syndication like that mandates that they like are extra thorough in certain regards where when you're owning and managing your own property, you do what you need to get done and you probably don't spend as much time because you don't need to share it with people. You don't need to discuss it with other people. And so I found that's helping like sharpen my game a little bit with my own properties.
Yeah, and that's exactly kind of my takeaways. It seems like it makes sense. It gives you, it is some diversification. Maybe it's geographic diversity, or maybe a little bit bigger building that I wouldn't take down personally myself. So it's just a little different exposure. But then learning from their cadence and what's going on with them could be invaluable. And also, too, as you get older, sometimes it's nice to have an LP interest that's just paying you distributions, and you have to do nothing, as opposed to the owner stuff. We're still active, so.
Yeah, you need a team. And is it your own team you've built and you manage, or is it someone else's team that you're leveraging there's a cost to it. But I agree with that.
Absolutely. Well, it was awesome talking with you, Justin. We'll have to do it again. I really appreciate you taking time out of your morning. What's the best way if somebody wants to get in contact with you? I'll put the links. Do you want the Amazon links to your books?
We brokers are shameless self-promoters, so I'm pretty easy to find. So if you just put Justin Smith and Lee and Associates, you'll find everything. LinkedIn is an easy way to connect, and then continue to see things that I'm doing. And then yeah, book is Kindle, Audible, and paperback and hardback. So any way that you like it, it's all good.
Fantastic, fantastic. Well, I've got to finish it. I'm taking a week off to the mountains next week, so I will finish that book, and I'll give everybody an update. But thanks for watching. Smash the like button if you're still there, and we'll see you next time.